Hoo boy! Did you see the market today? Today's Thursday, March 3rd, 2022. This is our post-closing bell report for the stock market. How do we begin this? First of, it was a volatile day. It started off seeming like stocks were gonna have a strong rally like they did yesterday, but that didn't last long. Volatility set in. The Nasdaq dropped 1.5%. The S&P 500 dropped by 0.5%, and the Dow lost about 100 points. But that does not mean the bull market is over. Some economic numbers worthy of note came in today as well. First-time unemployment insurance claims for the week ending February 26 stood at 215,000. Dow Jones economists had expected that number to be 225, so that tiny difference was viewed as positive. As expected, the mainstream media made this look like the best report since sliced bread. You would need to dig deep to learn the total number of Americans receiving unemployment insurance actually rose higher. That number is about 1.5 million. Folks, our economy is in shambles. That is just the honest truth. But the mainstream media will never say that. They will continue to distract and distract. Point to the environment, the war, or anything else. You are not allowed to know our government is robbing us blind. By tomorrow, we will get the non-farm payrolls report. For now, the economists at the Dow expect a gain of 440,000 in February. Let's wait till tomorrow, because we can't trust their expectations. At the rate these so-called economists keep missing the projections of late, one wonders why we need their projections in the first place. Besides that, the fear of Putin continues to hit the stock market. Travel stocks got hammered today, sliding by almost 5% hard. The story of the Russian invasion continues to take its toll on the market in different areas. European markets closed with a loss of 2%. Meanwhile, trust our government to seek every excuse to demand the Fed to print more money. Now the report is that the White House is asking Congress for a whopping $32 billion. What for? Glad you asked. According to them, it is needed to support Ukraine. I choose to put the support in quote here. Their second motive for the request is, going by Nancy Pelosi's best phrase, crush the virus. The crises in the world is always a gift to the government. They get to inflate more and more. And of course, Congress will most likely okay this new spending request. They want to be seen as nice. Folks, it's just a game. Meanwhile, in other news, at some point today, WTI was up to $116 a barrel. Yes, it did pull back, but still scary, folks. Few days back, we expected it to hit 125 pretty soon. But at this rate, we may be seeing crude oil at 150 a barrel. Unbelievable. If you went long on WTI, you must be smiling from cheek to cheek at this point. Good for you. Anyways, despite all we have seen, the setup continues to show that we are still in the bull market. The stock market is going much, much higher. This volatility will pass. This is not wishful thinking. We are paying attention to the bond market, the foundation on which this stock market rests on. Yesterday, our dear Uncle Jerome, as we like to call him here, that is the Fed Chairman Jerome Powell, admitted that inflation was higher than the Fed's annual goal of 2%. Really? Is he just accepting that? Now ponder over this for a minute. The Fed chair admits inflation is through the roof, and today, the White House is out running to Congress to approve yet another multi-billion-dollar spending plan. So clearly, this inflation thing has no end in sight. It is going to be a monster that will swallow all, except those strategic in planning to avoid it. Yet, that aside, something else is clear. The Fed is about to go on a money-printing spree, and of course, that would be reflected in the debt market. This plays a vital role in our confidence regarding the stock market. more money pumped into it will inflate asset prices. Simple. Hence, at this point, we are clearly looking at an excellent buying opportunity. Looking at the debt market, you find that the 10-year yield actually dropped today. It came down below 1.9%, while the Dixie spiked. When the opposite happened yesterday, the markets rallied. Hence, with this particular setup, one sees that something spooked investors, and they sought safety. Perhaps Putin said something new or investors reacted to Blinken's response to Putin's nuclear talk. Whatever the case, we stick to our game plan. This thing still looks very much like it's headed upwards. We must remind ourselves that stocks don't just go all the way up or down. They pause along the way. So every pause does not suddenly mean a derailment off the course. Everything still looks good for a strong market rally to continue. The politicians can keep doing their thing, while we focus on ours. That aside, there are some rumors that there may be a possible crypto sanction following Russia's invasion of Ukraine. Now, this is something that interests us. Politicians have a unique ability of using any crises to achieve their silly goals. Recall we still have to almost strip to our underwear at airports, despite the fact that the US has officially pulled out of Afghanistan. You can't make this thing up. Our leaders must really think we are fools. However, we are following whatever news we hear on their planned sanctions on crypto. It is of interest to us because, though they may say it is in response to the war in Ukraine, they will make it a blanket ban of some sort, just to frustrate people's lives. And on crypto, the crypto market was hit hard today. Bitcoin lost about 3% and Ethereum about 4%. Precious metals gained a little, though as expected, not that much. Of course, we know why. JP Morgan has been caught several times for spoofing. It's no longer news. This is the time to take advantage of these physical products, guys. Do what these banks are doing. Try to own some of these precious metals. Today, palladium had the most gains, rising about 3% to a 7-month peak. The good news on precious metals is yet to begin. Its time will come, and it would be parabolic when it starts to spike. To wrap this up, nothing much happened today. However, there was no crash. It is still important to get into some of these stocks now. Tech stocks were hammered. It is a buying opportunity, in our opinion. We have to continuously think of how to prepare for the impending doom. Though we continue to say the stock market is not crashing right away, we are not saying it will never crash. What the Fed is doing is unsustainable. It becomes imperative for you to take advantage of the opportunities that exist right now, in order to get ready for the inevitable future. Whenever that future may be, remember they don't care about you. All their welfare programs are on the brink of running out of money, and even if you argue that they will continue to print their way out of it, recall that they will not increase the stipends they offer you to meet up with the high prices that are coming. Do your own research, guys, and do what it takes to take care of yourself and your loved ones. As we always say, it is best to keep it simple. And remember, stick to your risk management in this game. The old saying of the market continues to remain true: bulls make money, bears make money, pigs get slaughtered. Thank you so much for watching. Please, kindly consider subscribing. We release videos every US market day, so please be at liberty to check out our other videos. It really means a lot to us. Thank you.